Inflation Explained: Why Prices Rise and What You Can Do. Welcome to this explainer on inflation, what it is, why prices rise and what you can actually do about it. Before we begin, this video is for education and information purposes only. It is not financial advice. You've probably noticed your weekly shop costing more. Fruit, veg, household items, even the total at the cashier creeping higher every year. Inflation affects all of us, whether we're buying groceries, paying rent, filling up the car or planning for the future. In the next few minutes we'll break inflation down into simple steps so you can understand what's really going on and how to stay ahead of rising prices. Inflation simply means the general increase in prices of goods and services over time. When inflation rises, each pound buys you a little bit less than it did before. There are a few common reasons why inflation happens. 1. More demand than supply. When lots of people want something but there isn't enough available, prices rise. 2. Higher production costs. If it becomes more expensive for companies to make or transport goods, they pass those costs on to us. 3. More money in the economy. If there's a large increase in money being spent, prices tend to rise too. One of the main ways inflation is measured is the Consumer Price Index, or CPI. This tracks the change in prices of everyday items we all use, things like bread, milk, petrol, and hundreds of other products. CPI helps us understand how quickly the cost of living is rising. There are three main types of inflation. Demand pull inflation, when demand increases faster than supply. Cost push inflation, when the cost of producing goods goes up. Built-in inflation, when people expect prices to keep rising, so wages and costs rise along with those expectations. Inflation affects everyday life in a few key ways. Reduced purchasing power. Your money doesn't stretch as far. Higher cost of living. Bills, food, transport and services all become more expensive. Wages may not keep up. If your income stays the same while prices rise, you effectively earn less in real terms. While you can't stop inflation, you can take steps to protect your money. Invest in assets that grow over time instead of relying only on cash. Avoid leaving cash idle, especially in accounts with very low interest. Diversify your investments so you're not relying on one single thing. Reconsider index funds and ETFs, which historically have grown faster than inflation over the long term. Here's a look at how UK inflation has changed over the past decade, using data from the Office for National Statistics. You can see periods where prices rose slowly and times where inflation spiked rapidly. Understanding the trend helps us see how the cost of living moves over time and why planning ahead is so important. Inflation shows up in the things we buy every day. The price of milk, petrol, a cinema ticket or popcorn, and even your electricity bill has changed noticeably over the years. These small increases add up, affecting our monthly budget more than we often realise. Inflation also affects your savings. If the interest you earn is lower than the inflation rate, your money is actually losing value over time. A piggy bank or a low interest account may feel safe, but in real terms, the spending power of that money is slowly shrinking. Inflation is especially important for people on pensions or any fixed income. When your income stays the same but prices keep rising, your money buys less each year. That's why long-term planning is essential to keep up with the rising cost of living. Here are 4 simple ways to stay ahead of inflation. Invest for long-term growth. Track prices so you understand how inflation affects your spending. Diversify, spreading risk across different types of assets. Protect your money by making sure it grows faster than inflation over time. Thanks for watching. If you found this helpful, remember to like the video, subscribe and hit the notification bell so you never miss our educational explainers.